What's happened in particularly the US stock market has taken a lot of people by surprise. I think what it shows is that in this environment of a different macro situation, there's a lot of uncertainty. You see this in interest rate volatility still. And the market can run with different narratives at different times. And it's switched from one to the other at various phases through the year. And what the market's now pricing is a soft landing. A lot has to go right for that, and the risks are in one direction, but it could carry on for some time. Our view is that this is a difficult environment for risk assets, given where valuations have got to, given the macro picture. So we prefer not to look at broad asset class exposures, but to actually get a bit more granular and precise within those indices.
OK, and let me ask you about these mega trends that you're focused on, and AI could be one of those, couldn't it? I mean, to what extent do you think that kind of cuts across cyclicality here, and it sort of acts as a structural driver higher for certain types of stocks, and which types of stocks?
Well, that's actually the big lesson, I think, from the first half of the year, that what happened in AI-related tech stocks shows you that some of these mega forces, which are going to shape the future of our economies, can actually take hold and dominate the cyclical macro picture in terms of market pricing for quite long periods. And now our inclination now is to continue to lean into the AI theme. We've seen it play out in chip stocks largely in the first half of the year, but over time we'll see it play out in data providers, people building and cleaning large data sets that enable AI. And it's not the only mega force that's going to be important. We're looking increasingly at the low carbon transition as well, where many of the industrial policies now being pursued by the US and Europe aren't really fully reflected in market prices. And we're looking at demographic change, which has been a big driver of the US macro picture, but is also going to shape over time demand for healthcare, different types of real estate, different types of leisure as well. So it's all examples where, even though it's a difficult environment for broad risk asset class exposures, there are real opportunities at the more granular level.